All right, let's dive right in. We're about to take a subject that, let's be honest, most of us find kinda dry, and we're gonna flip it completely on its head. See, this is an explainer about accounting, but not in the way you're thinking. We're gonna see how the rules of business might just be the secret to understanding, well, you.
So be honest. When you hear the word accounting, what pops into your head? Spreadsheets? Taxes? Late nights during audit season? Yeah, for a lot of us, the word is just boring. I totally get it. But what if that whole stereotype is just wrong?
Here's the core idea we're going to unpack. Accounting isn't really about math. It's about logic. You can think of it as a language, a system for telling a story where money is the main character. And once you learn to read that story, you can use its lessons for so much more than just a company.
So let's get real. Forget the boring introduction. We're not going to start with debits and credits and all that jargon. We're starting with the only thing that actually matters, why you should even care.
Okay, let's be super clear about our goal here. This is not about turning you into a CPA, not at all. It's about making you a smarter decision maker. You don't need to master all the tiny details. You just need to understand the language well enough to ask the right questions.
Which brings us right back to this central idea, storytelling with money. I know, it sounds a little weird, right? How can a bunch of rules and numbers actually tell a story?
Well, at its heart, that's exactly what accounting is. It's the language of business. It's this universal system that companies all over the world use to do three things: record what's happening with the money, understand how they're really doing, and then, most importantly, communicate that story to everyone else. It's basically a narrative framework with rules.
And here's the wild part. This entire language, this whole storytelling system is built on one single elegant rule. There's one golden equation, and once you get it, everything else just clicks into place.
And to get it, just forget about business for a second and think about the phone in your pocket. How'd you get it? Well, you probably paid for some of it with your own money, right? And maybe the rest is being paid off through your phone plan, which is really just a type of loan. So what you have came from what you put in and what you owe. That's it. That is the entire concept.
So that simple idea from your phone? That's the foundation for the big formal accounting equation. Assets equals liabilities plus equity. In plain English, it just means that everything a company owns, its assets, has to equal what it owes to other people plus the owner's own stake in the company. It always has to balance. Always.
Now let's talk about a super important distinction that trips almost everyone up. It's the difference between profit and cash. And here's the easiest way to think about it. Profit is what gets the applause. It's the big, shiny number you announce, but cash is what actually pays the rent. Cash is reality.
And this leads to a fact that just blows people's minds. You can be a profitable company on paper and still go bankrupt because you literally run out of cash. And the other way is true too. You can be losing money for years and be totally fine as long as you have cash flowing in. You see, cash is the oxygen a business breathes. Profit is just the report card.
Okay, so we've got the basics down. And now, this is where we make the jump. This is where things get really interesting. We're moving from ledgers to lessons. This is the big reveal.
So I want you to just chew on this question for a second. What if a balance sheet, that simple financial snapshot, actually knew more about your life than your own diary? What would happen if we took this exact business framework and applied it to ourselves?
And this is how it works. Look at this. On one side, you've got the business terms we just talked about: assets, liabilities, equity. And on the other, we have the life terms. This is the translation key. This is where it all clicks.
Let's break it down. Your personal balance sheet. Your assets, they aren't your car or your house. They're your skills, your relationships, your ability to bounce back from failure. And your liabilities? They're not just debts. They're your fears, your biggest regrets, those toxic people who drain all your energy. And your equity, the owner's share, that's your self-worth. It's what's left over when you subtract all that negative stuff from all the good stuff.
And if you really think about it, you're doing this all the time, whether you realize it or not. Every choice you make, every new skill you learn, every person you decide to trust, you're making entries in this personal ledger. It's like you're doing this constant, subconscious mental accounting of your own life.
So ultimately, it comes down to this. If accounting is the language of business, the tool for seeing reality clearly, then what's the version for our own lives? It's self-awareness, plain and simple. Self-awareness is the language of life. It's just a practice of being honest about our own personal balance sheet.
And this quote just brings the whole thing home perfectly. A company cooks its books to impress investors. A person fakes their life on social media to impress strangers. The motive is the same. But here's the thing. Both of those fantasies collapse when the real currency runs out, whether that currency is cash or love.
So that leaves us with a real challenge, doesn't it? Are you tracking your own life with the same brutal honesty that a good CEO tracks a company? Are you actively trying to build up your real assets and pay down your liabilities? Are you focused on growing your real equity, your actual self-worth, or are you just chasing the profit that looks good to other people? Because at the end of the day, no one else is preparing this balance sheet. The books are yours and yours alone.